So now profit maximization. So what do you mean by profit maximization? Yesterday we have discussed the financial manager would definitely like to maximize the profits of the company. Am I
Yeah.
right? So how will you know whether the profit is either by checking the books of accounts or through the cash flows what the company is generating? Okay.
Okay.
Now, so where entrepreneur is in full managerial control of the firm, as in the case of small owner managed company or partnership, the economist assumption of profit maximization would seem to be very reasonable. Remember though that economist concept of profits is broadly in terms of cash, whereas accounting profits are not may not equate to cash flows, because accountant's profit is a different thing and economist's profit is a different thing. Economist takes into consideration the risk return relationship. He focuses on cash flows rather than accounting profits. Am I right?
Yeah.
Because here we go with the accrual concept. Now, even in companies owned by shareholders but run by shareholding managers, if the manager, so I'm speaking about a big company whereby the management and the ownership is different. If the manager is serving company's interests, we might expect the profit maximization assumption should be close to truth. Now, although profits do matter, they are not the best measure of companies' achievements. That has to be noted. This point is noteworthy. Accounting profits are not same as economic profits. Why? Because accounting profits can be manipulated. Do you agree with this point?
Yeah.
So what are manipulation thing? Provisions such as provision for depreciation or anticipated losses. That means you can create a depreciation provision as per your vision will.
Yeah.
10%, 12%. There's no clear thing. Okay, fine. If you file a tax return, they'll say you machinery has to be depreciated as per this particular rate. And I think you have good idea about taxation, if I'm not wrong.
Yeah.
There they'll give you all the slabs and everything, but here in accounting it's based upon your past experiences. Point number
Yeah.
two, your anticipated losses, that means bad debts. You can put 10%, you can put 15%, anything. The accountant would do all sorts of things. If he enhances the provision, the profits are less. Okay, he can show losses. If he has some other intention, okay,
Yes.
that means he wants to hide the income and wants to show that many of the like fake bad debt slips, that means this many customers have defaulted, he can show that. Point number two, either they can reduce the provision and try to show a higher profit to pull the investors. In both the ways it is creative accounting. Am I right?
Yeah.
Then certain expenses are capitalized. Okay, meanwhile those expenses should have been expensed. For example, R&D, research and development. Research is an expenditure. Development development is something after research, when you are confirmed that people are suppose you have done some research on some particular thing. Suppose you want to make an electric vehicle. So this electric vehicle you have shown in the auto expo, and now from that you have seen that people are showing a lot of interest. Now you start your development. Fine. So
Yeah.
development is a big process. Research is sunk cost. Whether you start production or you don't start production, it has to be incurred. This is an expenditure. So research is an expense, development is a asset. Am I right?
Yeah.
Because you can expect future probable economic benefits out of development. So capitalization of various expenses, that means they will also try to put research along with development. That in that way they may hide and show higher profits. That can be manipulated. Adding overhead cost to inventory valuations, which should not be done. Overheads are indirect cost. Am I right?
Yeah.
Overheads are what? Are they direct or indirect?
Indirect costs.
So can you show overheads in the being indirect cost? Can you capitalize it? Can you add with the inventory, or you have to show that in the P&L?
No, it should be in the P&L.
That's it. Then fine. So in this way they are manipulating things. And see, profit. accountants won't consider this risk factor at all, but economists do. And you know, risk is inevitable, cannot be separated from your project. It is associated with the project. I said you cannot eliminate it, but you can minimize it. And profits on their own take no account of volume of investment. A very big investment would also give you 10% returns. A very small investment can also give you 10% returns. Then what? So profits on their own take no account of the volume of investment. That is, it has taken to earn and on the profit. So profits on their own take no account of volume of investment, like how much big level investment you're doing. That is not considered. Only the profit is considered. Am I right? Okay, I
Yeah.
have just invested 1 crore rupees. I got a profit. I invested 1 lakh rupees. I got a profit. So or else I can say 10 lakh rupees. Chalo. So 10 lakh rupees ka profit, 10 lakh rupees I've invested, I've got a 10% or 15% returns. 1 crore ka profit, I've got 10 or 15% returns. Do you think both are then what is the use of doing a big volume investment, a huge investment, when small investments can also give you good returns? Correct.
Yeah.
So profit must be related to volume of investment to have a real meaning, and that would look realistic. Hence, measures of financial achievement include accounting return on capital employed. So this we have already discussed. If you want to find your financial achievements, okay, these
Yeah.
ratios can tell you about your growth, about your performance,
Mm.
about your return on investment. Am I right?
Yeah.
So the first one is accounting return on capital employed. So you know, if I'm speaking about accounting return, I'm speaking about net income by the capital employed. Correct?
Yeah.
Is that your ROC?
Yeah.
And then if you want to know the suppose like the shares in which you have invested, suppose the shares, the equity was 1 lakh, 100, chalo 100. Now 10 rupees ka profit your company has made. Now your equity is 110, and number of outstanding shares are 10. So previously what was your EPS? 10. Now your EPS is 11. So company has earned a good profit. It's a profitable concern or not?
Yes, it is.
What is equity? Equity is a combination of share capital and retained earnings. Am I right? And some
Yeah.
revaluation surplus. I think F7 is done for you. Have you
Yeah.
finished
Yeah.
your
It's done.
F7?
Yeah.
What's the score you got?
I just passed like 51.
Okay, 51. Just okay, good. Okay. So, just a second. Excuse me. So now, as you see here, your EPS was 10. Now your EPS is 11. So if your retained earnings is increasing every year, your EPS will be high. Understood fact. And
Hmm.
yield, when I speak about yield, I speak about the market returns. Okay. So
Yeah.
yield on investment. So how will you find out yield on investment? See, suppose I have invested 1 lakh.
Okay.
Okay. Hello. Hello.
Yeah.
See, there are two things. There are two things. You know, DPS, dividend per share,
Yeah.
and you know, EPS. Okay.
Yeah.
Now there is also one more thing. If I have to say, if I say DPS by MPS, then what it is? It is dividend yield ratio. Am I right?
Yeah.
So if your dividends are $10 and your market price is $100, so 10% is your return from your market price. Correct? That
Yeah.
is dividend yield ratio.
Hmm.
What is DPS? Dividend per share. Am I right?
Yeah.
Now, so these are the points. EPS. Let's go for the EPS. The formula for EPS is net income by, or if I say profits, if you want, you can say profit by
Yes.
outstanding shares. Can I write this? Outstanding shares.
Yeah. I think there's some other formula for it as well. Yeah.
What is your formula?
Don't remember exactly. No,
Okay,
the
I'll
one.
write a formula. income available to common shareholders by weighted average shares, weighted average common shares outstanding. Can I write like this? See, I
Okay.
take various courses. There are various formulas, but at the end of the day, the things are same. Okay.
Okay. Yeah.
Weighted average is nothing but based upon the proportion of holding each and every shareholder has.
Hmm.
You give the weightage. Am I right?
Yeah.
I have to tell like 60% A has invested, 40% B has invested. So can I say the weightage is 60-40? In that way, can I give the can I find out the weighted average number of shareholding?
Yeah.
I can do that, na?
Yeah.
It's nothing but I have 100 shares outstanding. Out of that, 60 shares is owned by him and 40 is owned by him. So I've done the weighted average. Like how? Number of shares into the weight plus number of shares into the weight. So I will get the number of shares outstanding. So outstanding shares are still 100, correct or wrong?
Yeah.
So net income, suppose your net income is 100, outstanding shares are 10. So what is your EPS? $10, correct?
$10. Yeah.
So the more the outstanding shares would increase, the more the dilution in EPS. Fine. How
Yes.
the dilution would happen? Suppose if the shares are increasing, if I am there are more 10 shareholders in the company. Now the shareholders are increasing. There are more 10 shares I'm selling, for example. So 100 by 20 it would become so $5. So the EPS has got diluted or not?
It is.
That's it. So let's go with this question. Please read this.
Uh, Walter Wall Carpets made profits before tax in 2008 of
So there's a
9
company
million.
here made a profit. The
Yeah.
tax is this. Company's equity has been given. These are the number of shares. $1 each is the share value. These are the preferred stock. So preferred stock should not be taken into consideration. Those are not the ones which has to be taken for EPS calculation. Okay, EPS is solely for the equity shareholders. After meeting all the obligations, whatever is left over has to be apportioned amongst the existing equity shareholders or outstanding shares, okay, which are in the market. So when I speak about outstanding shares, you should not consider those shares which are held by the directors or by the employees, etc. These are outstanding shares which are in the market, which can
Okay.
be sold and bought in the market easily. Correct?
Yeah.
Okay, fine. Those things will not be asked to you. Your syllabus is not having those details and depth. Leave it. So this is my PBT. I have deducted the taxes. You know, I have an obligation towards the government. I got the PAT. From that, I need to remove the preference shareholders dividend because this would definitely go to retained earnings, and there also I have to do the same task. This is the earnings attributable to ordinary shareholders. These are the number of shares. So 63.6 is my EPS. Correct?
Yeah.
So did the same thing I said. IAC, income available to common shareholders or earning attributable to ordinary shareholders. Does it mean the same? Divided
Yeah.
by outstanding shares or number of ordinary shares. Does it mean the same? Yes.
Yeah.
I made the things easier for you. Please go
Yeah.
for this question and tell me what they are saying.
So the earnings attributable to shareholders for 2 years is given,
Okay.
and the company share capital on in both years is given combined. That was 12 million. We have to calculate the EPS.
So there's like this is given, net
Yeah.
income is given, outstanding shares are given. You got the EPS, and again this year's also is given, and they are saying EPS of the 2009 is this and 8 is this. You can see the percentage change. Am I right?
Yeah.
Excuse me. I'm sorry. So what are you seeing? The growth in the EPS is how much? 7.6%, correct?
Yeah.
That is the current figure minus the previous figure divided by the previous figure. So you'll get to know the answer. Actually, this is the current figure, sorry. Current value minus previous value divided by previous value into 100 will give you this. Now, there's a growth, but you know, EPS can be manipulated. See, if you do some manipulations, that will have an impact on your earnings, correct?
Yeah.
If your earnings are not correct, then your EPS is not right. So can you blindly trust on EPS?
No.
No, that's the problem. And EPS is a figure based on past data, and it is easily manipulated by changes in accounting policies. And by accounting policies, as I spoke you regarding the estimates, regarding the provisions, what they make, etc., or different depreciation methods, and by mergers or acquisitions. So if you merge with some other company or anything, so there is a high chance of EPS getting manipulated. Okay, so the use of measuring, calculating management bonuses make it particularly liable to manipulation. See, if EPS are high, that's an indicator of good performance by the company. So these guys will try to manipulate profits and show a higher EPS. With that, they just want bonuses, correct? For
Yeah.
example, EPS can be increased via a share consolidation, exchanging a number of shares, existing shares for new share without altering the total value of shareholding. They do that. So EPS, how they are increasing the EPS?
Via the share consolidation.
Yeah, but
Yeah.
actually, if the existing shares increase, outstanding shares increase, EPS gets diluted. What are they speaking? EPS can be increased via a share consolidation, exchanging. Achha, okay, fine. So what is happening is you are just exchanging the shares for buying that company. Hello.
Yeah.
So what are you doing is for every 2 shares, you are giving 1 share of your company there,
Yeah. We've
and,
learned
and
that in FR, yeah, consolidation.
yeah, and you are buying that company with a share exchange, but not
Yeah.
with cash.
Yeah.
So the EPS can be high because for every 2 shares you're giving 1 share. So is that changing any? Is that showing any change? No, the holding is still same, na?
Yeah.
That's it. So in that way also you can increase your EPS. See, EPS will only be decreasing only if the outstanding shares are more. Fine. If the outstanding shares are less, EPS won't increase. It will be high. Other financial targets also your manager promises to you being a shareholder, you being the shareholder, they give you a lot of promises that they'll enhance EPS, they'll enhance DPS, they'll kind of maintain the gearing levels to 1:1, and they will not allow the cost of interest payments to be higher than 25% of total profit. That means if a company earns a profit of 1 lakh, they will not make the things go in such a way that 30% of this profit goes as interest. So 25% is what they're going to restrict it to. Okay.
Okay. Yeah.
And they also make a target of retaining the profits. So for example, management might set a target that dividend coverage ratio should not be less than say 2.5 times. That means what is dividend coverage ratio? Suppose this is the company's profit, PAT by like dividends. Am I right?
Yeah.
So if the PAT is 1 lakh and the dividends are, for example, 10,000,
$10.
10 times. That means your company has 10 times the capacity to pay the dividends. Is that a good news?
Uh,
Yes, because it
yeah.
is
Yeah.
not less than 2.5 times. Am I right?
Yeah.
2.5 times is very less. It's not acceptable to any shareholder to get to see the company's capacity to be just 2.5 times. That
Yeah.
means company is supposed to make us dividend payments. So what they are supposed to make, at least the profit should be more than 2.5 times they should
Yeah.
have or they should hold. If it is less than that, then it is not good. I'll say ideally 6 times. That means company should have at least 6 times the capacity to make my preference dividends, fixed preference dividends payment.
Yeah.
Next. Are you following? Am I going fast? No.
No. I'm understanding.
A target for operating profitability. See, your operating profitability should be high. That shows that every year your business operate you're earning good operating profits. How you will find out operating profit or operating income in sense? You have done FR. Please tell me.
I don't remember the formula.
Very simple. Yeah, tell me anything. I don't mind. If it's a formula, please tell
Of
me the formula.
operating profit by is it revenue into 100?
Nothing like that. It is revenue. I'm just asking operating profit or operating income. If you do
Yeah.
cash flow statement or if you do the income statement, revenue minus returns is net revenue less
Oh, okay.
cost
No,
of
I
sales
was
is
telling the formula for operating profit ratio.
okay. I'm just asking operating profit or
Yeah.
operating income. Okay. Gross
Yeah.
profit less operating, administration and selling expenses gives you operating profit. That's it. Finish.
Yeah.
So this should be high every year. Fine. If I speak about the ratio, so your ratios, they set a target like we will not let the profit go less than 10% or minimum 10% returns we will give you. That's what they promise to pull the customers, okay, shareholders, and they say that whatever $1 you invest, we will definitely give you 20 cents at least. That is 20% minimum ROC you can generate from our company. That is what they promise. They show a lot of past track records and they try to attract. So these are the financial targets they set. Okay.
Yeah.
There's a question in front of you about the Lion Grange company, it seems. So I can explain this question. I don't have a problem, but can you try to explain me this?
Okay.
Hello.
Yeah. I'll
Will
read
you
it first.
what?
I'll read it.
Yeah, no problem. Or else these kind of questions even won't come in the exam. But still, I'm saying I will explain. Not a problem. We can do one thing now. We can go for ratios right now. Since we have started with ratios, why don't we do a ratio thing right now
Yeah. Okay. No problem.
and wind up the ratios as soon as possible in today's session, and tomorrow go with the same thing which we saw backside.
Yeah.
Correct.
Hmm.
Do everything. Don't worry. The thing
Yeah.
is, since we have started with the ratios, let us wind up with ratios. In
Yeah.
half an hour session, we can finish more 4 or 5 pages. Let's go. See why we should follow ratio analysis, why we should believe on ratio analysis to find out the company's performance in various areas. Correct.
Yeah.
If I have to speak liquidity, solvency, liquidity is like short term solvency, long term solvency or solvency, whatever it is, like turnover ratios, profitability ratios, overall profitability ratios. All these are the areas in which we have to see the performance of the company. Correct.
Yeah.
Those can be analyzed with the help of these ratios. So we are seeing some set of ratios, and let's see the ratio pyramid how they make. ROE. This is only net income by equity shareholders funds. Correct. Fine.
Yeah.
So this, see, DuPont system. DuPont is nothing but clubbing 2, 3 ratios and getting a single ratio.
Yeah.
So when you multiply this ROI and total assets by equity, you get ROE. How? What is ROI? It is like net
Return.
income by say like investment, like capital employed, correct?
Yeah.
Into total assets by
Equity.
equity or equity shareholders funds, correct? So suppose in your company, these are the total of assets, that is current asset and fixed asset. This is equity. This is long-term loans and bonds or whatever it is, current liabilities, total of liabilities. But if you see, if you don't have this one, so can I say equity is this like okay, sorry. If you don't have current liabilities, let's say, or for the time being, some companies also take capital employed as equity, long-term loans, and current liabilities also.
As what?
See, some analysts consider
Yeah.
the all kind of like capital as capital employed. That can be equity, that can be long term loans, debt
Okay.
finance. See, equity debt, preferred stock, all this retained earnings are if you combine all this, it is equivalent to what? Capital employed, correct?
Good, yeah.
Some analysts also consider current liabilities.
Okay.
So that makes it equivalent, na? Total of assets is equal to capital employed, fine.
Yeah.
Some analyst, you can check out, you can Google out. But if you don't have current liabilities, your equity plus debt plus preferred stock plus retained earnings will be
It's
equal to total of assets, fine.
yeah.
So can I cancel this, guys?
Yeah.
So I have net income by equity shareholders funds. I have that,
Yeah.
or equity. So did I get the return on equity?
Yeah.
Correct.
Yeah.
And then return on sales. So if I say return on sales, uh, profit margin, that is net income by sales. Okay. And asset turnover is, if I have to say asset turnover, so like sales by, uh,
Total assets.
I have to say uh, total assets. So
Yeah.
$1 of total assets, how much revenue it is generating? $5, for example. So if I cancel this, I get net income by total assets, and that
Yeah.
net income by total assets. For total assets, can I write capital employed also?
Yeah.
If
Because
I
there's
if I
yeah.
don't, yeah, I can
Yeah.
equate, fine.
Yeah. Yeah.
So I got this point even, and
Yeah.
then netting. I didn't even see this ratio, fine. Okay, net income by sales is what I have. Sales minus total cost is your net income, and this by this is what? Okay, I didn't see the ratio at all. I didn't see. I just posted what I know. And these two, if I combine, I get total assets. So this is a ratio pyramid. Okay,
Yeah.
let's go ahead. I have already explained about the ROC. Why they take PBIT? Because capital employed has everything. Debt, like equity plus debt plus preferred stock. So these guys have to get interest. These guys have to get dividends. These are profit. These guys have to get their dividends. So I take PBIT. By capital employed is total assets less current liabilities. Fine. If you don't have current liabilities, if it's zero, then total assets and capital employed are one and the same. Am I right? Hello.
Yeah.
And a time shareholders funds plus long-term liabilities or bonds is equal to your total assets less current liabilities. That's also equivalent to capital employed. So
Yeah.
everything I've showed you there.
Yeah.
So this is what they are doing. PBIT by sales revenue, profit margin into asset turnover is what we get. And the thing is simple. If you get 10,000 ka profit and 1 lakh is what you have invested, so $1 pay, 10 cents is what you're earning. That's it. And if it increases every year, previous year it was this, if this year $10 per 15 cents you're earning, this year is a better performing year for you. Return on equity, so we'll just do some kind of refinement in capital employed. Was equity plus debt plus preferred stock plus retained earnings. Okay, we will
Yeah.
remove this. We'll only take equity and retained earnings, so we'll get shareholders equity, correct?
Okay.
Just what 10,000 is what is the earnings attributable to ordinary shareholders divided by your 1 lakh, whatever the equity you have. So $1 per 10 cents you are earning. Same. These
Yeah.
two are not absolute measures compared to previous year. If this year's return on equity is high, then company is doing well. That means every investor expects that expectation theory, that you always expect good returns. So if the returns are increasing, definitely the sentiment would be good and the investors would be happy.
Yeah.
Profit margins. Uh, Here we have gross profit. So gross profit by net sales will give you the profitability from your core operations or prime activity of the business.
Yeah.
So 40%, 45%, this is a good year. And in the same way, net profit is the net profit divided by sales. That means it is the profit after you earn your prime activity and move forward. Because a step to move forward is nothing but at least you should get gross profit first. Correct?
Yeah.
If you have gross loss, then there is no need for you to go ahead. That's it. That business is a loss business, loss
Okay.
making business. So you have profit, and again you have certain overheads, indirect expenses. After deducting all of them, that is after deducting operating, administration, selling expenses, you get operating profit. To this you adjust your non-operating income, and like you add non-operating income, you subtract non-operating expenses, you get net profit, correct? So
Yeah.
that net profit by net sales into 100 will give you your net profit margin. Again, it's not an absolute measure, comparative measure. Previous year to this year, if the profits are, if the profitability ratio is high, that's a good thing. Let's move forward. So debt and gearing ratios, actually they have covered that in chapter number 15, so we'll see there.
Okay.
Liquidity ratios, current ratio, quick ratio,
Yeah.
CA by CL, and quick assets
Quickest.
by current liabilities. 2:1 is the ideal ratio, 1:1 is the ideal ratio. If I'm not wrong, you may have a good idea regarding this because you have already done this one in your F7 paper, correct?
Yeah, yeah, yeah.
I need not explain that.
Yeah.
Fine. Now, shareholders investment ratio, I have done an investment. So what is the return I'm getting? So dividend yield is one of the things I look forward to, because my market price of share and the dividends what I get. X dividend I will take. Why? Because after paying the dividends, definitely I'll get my exact value of my share of this year, correct?
Yeah.
See, the company would declare dividends for the shareholders. Let them deduct the dividend, then only I'll get to know my exact value of my shares. Fine. See, $100 was my profit,
Okay.
my retained earnings. This year my company has got a profit of $10. Out of that, $5 dividend we are giving. So how much is the share value now?
105.
Shall I calculate my dividend yield on 110 or 105?
105.
It makes sense. I don't know what the faculties and teachers will tell कि आप ऐसा कर लो, इसको ऐसा रट लो, ऐसा वैसा नहीं है. समझना है कि dividend देने के बाद, after giving the dividend, you know the exact value on what you're earning, your
Yeah.
dividends. Fine. Because dividend pay करने के बाद the share value will definitely decrease. That's
Yeah.
understood fact. Here we are. Please finish this problem. We'll move forward.
Okay.
See, there are two terms. Cum dividend is before paying the dividends. Ex dividend is after paying the dividends. When company declares the dividends, it declares the dividends only if it knows that it will earn that profit. Correct?
Yeah.
Management is not that silly and stupid कि वो लोग ऐसे हवा में बातें करेंगे. They will only declare the dividends if they know that it's going to happen. So when
Yeah.
they declare it, they'll pay it. Understood fact. That's it. So ex dividend is nothing but before making the dividend payment, the share value was 100, 110 for example. After the dividend was paid, the share value is 105. This is the exact market value. Please finish this, and EPS is already done. So I would expect you also to do the EPS thing. I'll just explain you the PE ratio,
Okay.
and then we're done with ratios. Fine. Great. Great going. Okay. First chapter is a very big chapter actually. You can let me know if you're done. I'll move forward.
Can you just explain the question, like how did they get the answer?
See, in the year 30, 2008, September 30, 2008, an advertising agency declares an interim dividend 7.4 cents. So they have declared. That means they'll pay,
Okay.
and the final ordinary dividend is this.
Yeah.
So ex dividend share is this. So they asked you to take ex dividend. After deducting all the dividends only, you should consider. Okay.
Okay.
Interim dividend is nothing but they got this previous year actually. See, this is accumulated. This will accumulate. Am I right? What are interim cash flows? You will get it. Okay.
Yeah.
That is what you got it, and this one is what you're going to get again. So the
Okay.
total dividend is 16
16 cents.
cents.
Yeah, yeah, okay.
Now after adjusting that from the share value, the ex-dividend share happens to be this much cents, you can get your dividend yield.
Okay, got it.
Total dividends is 16 cents there.
Yeah.
EPS is done. P ratio, market price by EPS. Suppose my market price is 100, my EPS is $10. My P ratio is 10. My market price is 120. My EPS is $10. My P ratio is 12. Higher P ratio is an indicator that company is doing well every year. If the P ratio is going on increasing, if your numerators are high, that means your market price is high.
Yeah.
Market price is high, that means your company's share value is in demand.
Yeah.
Your company shares are in demand in the market. People are in queues to buy your shares. So when your shares value is high in the market, that means your P ratio will be high. It's an indicator that in future you're going to do well. If
Okay.
this year the things are not going well for you, don't worry. Since 5 years your P ratio was high, it's a forecasting tool. It will give a forecast for for the future prospects in your company to the potential shareholders, the ones who wants to buy,
Yeah.
potential investors, the ones who want to buy. Okay, in the future. So higher P ratio is an indicator of good performance expected from the company in the future.
Okay.
Can you solve this right now?
Sorry?
Can you solve this right now?
Yeah.
Any more questions if you want to ask?
No,
For
I
PNC?
am I'm like familiar with these ratios. So ratios are fine, not a doubt. I mean,
Okay.
we do we deduct the 12 cents from the share price
What?
over here in this question?
Uh,
The declared dividend, 12 cents, they've taken only 3.6, yeah? So they've deducted the 12 cents from the share price of 3.72.
yeah, it was come dividend. We will take ex dividend,
Oh,
market price.
yeah. 5 yes. Okay, got it.
So ex dividend only you should take always.
Okay.
So today we will just stop here because taking a new topic is again a extension of half an hour.
Okay.
So I would just stop here, and tomorrow what I will do is tomorrow I'll take a because I'm shifting things to online only from my academy also.
Okay.
So I will probably get some good time to teach because here only 1 hour I can devote to students.
Yeah.
So this is what tomorrow's plan would be to take this. From here, I will finish this all topics in between,
We'll
and
begin from the stakeholders, yeah?
yeah, I will try to finish as much as I can in the next session. I have to put a full stop to this chapter now. Okay.
Yeah.
Meanwhile, I'm sending 2 more videos,
Hmm.
so that would also help out in finishing. Am I right?
Yeah.
Hello.
The two textbooks are a little different, yeah? The Kaplan BPP.
Yeah, they are different, na?
I
Somewhat.
don't think we have this fiscal policy and all. I'm not sure if we have it. We didn't learn it yet.
No, no. This is also a textbook. That is also a textbook. Both are prescribed textbooks.
Okay.
So anywhere else you will be kind of clubbed and you will be learning that.
Okay.
Okay.
Yeah, yeah.
So I am sending more 2 videos to you for your investment decisions today, and you go through that.
Yeah.
Tomorrow we will try to finish this chapter because this is a big chapter. 3 classes would definitely be required for this. Then rest of the chapters we can finish soon. Two classes, or small chapter one class is also enough. Hello.
Hello.
Okay.
Yeah, yeah. Got it. We
Okay.
can.
Okay, Isha, then I'll just send you the videos. Go through them. Next 2 videos. Okay.
What time will you be taking tomorrow?
Tomorrow I'll inform you. Actually, from Monday I'm shifting completely to online only.
Okay.
So Monday onwards I will have good flexible time with me. So
Okay.
every
Okay.
day I can take the classes.
Yeah.
So probably your college, this thing is clashing with our classes, na? So evening
Yeah.
probably 5:30 would be the time.
Yeah. No issues.
Okay. And any of your friends also interested to take F9, you can ask them.
Yeah. Sure. I'll let them know.
Anyone said you?
No, actually, we just attempted the exam this time. So, like a lot of them are planning for other subjects also, like AA and all. So, not sure how
A?
many of them are giving. Audit, F8.
Audit is a waste subject. Anyone can write that. If anyone, I hate like teaching audit and all. वो theory paper है वो दिमाग खराब रहता
Yeah.
उसको रीड कर करके समझाना इतना डम भी नहीं रहना स्टूडेंट ओके फाइन वो थियरी है बट योर बुक हैज नथिंग रिगार्डिंग द प्रैक्टिकल थिंग्स एटलीस्ट एक छोटा प्रैक्टिकल एग्जांपल देना है कैसा हो रहा क्या हो रहा जस्ट थियरी
Yeah.
दे दी है हाउ विल यू लाइक लर्न इन प्रैक्टिकल वे कि ऑडिट में वो कर क्या रहे हैं सिर्फ थियरी दे दिया ना
Yeah, only theory है उसमें पूरा.
वैसा नहीं रहना चाहिए ना दे शुड एटलीस्ट गिव यू एक थियरी कॉन्सेप्ट के साथ नीचे एक प्रैक्टिकल दिए तो
You know,
आई
yeah.
डिडंट एक्सपेक्ट दैट फ्रॉम कपलान बट दे आल्सो डिड द सेम थिंग इन ऑडिट
Okay.
fine well no problem if anyone requires F7 F9 any paper you can please let me know okay Isha
Yeah, I'll let you. Thank you.
thank you see you tomorrow